Good morning, good afternoon, good evening, wherever you may be. This is Sid from Elliott Wave Plus, and this is the August 4 of 2022 edition of my quarterly premium plan webinar, where I'll go over pretty much everything associated with our flagship product, the premium plan, and there will be lots of room left for individual questions. Please use the chat for that along the way. I keep an eye on the chat keep an eye on it as we move through. So there'll be plenty of chance for folks to ask about maybe some of my other work at my current Elliott Wave count on certain things. But at least here in the beginning of the webinar, I'm going to talk about the two things that distinguish our flagship product, the premium plan. Before we get started, I'd like for you to be aware of my disclaimer. It's at my website, elliottwaveplus.com, and I'm going to turn off the video itself so you can see the whole screen. Elliottwaveplus.com is our website here. Scroll to the bottom of any page there and click on Terms of Service Disclaimer. That's where my disclaimer is. It's there all the time. Please go there and read that in full. Revisit it as often as you like. If I were to summarize it in one sentence, it would be, there's risk of loss in all trading. And also, when we're talking about automated algos or automated trading, I also want you to be aware of a very important statement I'm required by law to put in here. It's somewhere in here, and that is past performance is not indicative of future results. So there's the disclaimer, and I want to bring up my preferred charting platform, Trade Navigator by Genesis. Been using it for a very long time. And we're just going to jump straight to our daily chart that features our automated momentum algo. The name of the algo is kind of long, but it's kind of the version 2.3 of the algos. We've continued to improve it over the years. We've had this service now, the premium plan service, for several years, and we continue to make improvements along the way on the algo. The whole idea with our algos and our nightly reports is that if someone so chose, they could check an email we send out every night that would include screenshots of over 20 of these daily algos on about over 20 different trading instruments. And then we also included nightly is a nightly report that shows if there's any new signals or new things that you should be doing with your trading. For instance, trailing the stop on an existing position or exiting a position. And I might as well just show you very quickly. I'll bring the website back over. And at the website, if you are logged in, it will change the headings that you see up here depending on what service level you are at. For instance, if you are a basic plan subscriber, you would only see the screenshots tab. You wouldn't see the webinars tab and the nightly reports tab. You would see the resources tab, which includes the blog and the educational videos and guides and that sort of thing. So you can see under screenshots, you can go back and look at screenshots. I do those every Wednesday and every Sunday. And you can go back a long, long way. I try to keep a couple of years worth of data on here if I can. And we'll actually go back and look at some of these as we get into this webinar today. Also, if you are a subscriber to the Pro plan, then you would see the screenshots tab and the webinars plan tab. And this is every Sunday I hold a webinar. They average about 3 hours long. So they are highly detailed and they cover so many different markets and commodities, currencies, bonds, stock markets around the globe, ETFs, and some other things. And it takes about 3 hours on average to cover all that. And if you want to see, like this is the last one. This is from Sunday, July 1. We have the original Zoom recording here you can play. And then we also, a couple hours after we post the Zoom recording, we'll post a version of the entire recording where you've got an on-screen menu where you can jump. Like, for instance, if you're interested in mining stocks, you click on that and it jumps on the timeline right exactly to that coverage there. I think we are, Julius, I'm sorry you don't have audio, but I believe the problem would be on your end since you're the only person that's mentioned it so far. I'm quite certain there would have been lots of people chiming in complaining about no audio. So anyway, I don't know why I'm talking to Julius because obviously he can't hear me. I'm just gonna audio problem must be on your end. Sorry. I wanted to get an answer to the gentleman on the chat. Anyway, so you have the very quickly after the webinar is over, you have the full version, but I wanted to make sure everyone was aware that they could go back and revisit that webinar all during the week as often as they want. And if they wanted to look at my coverage of any specific item or group of items that I normally cover. So that's under webinars. And then under nightly reports, there's two different tabs that could come up there. The daily trend reports is for the what we call the trend plan. It's our least expensive plan. There's no Elliott Wave charts or a Hearst analysis on these. It just is a simple, very simple trend chart where it will let you know what the current trend is on any number of items. So the trend has generally been up until recently, and I'd say it's back to about neutral on Australian dollar. And let's see if okay, the trend obviously is down on crude oil. So these are tonight's screenshots. So you can just very quickly look through and see the trend is up on the Dow Jones Industrial Average. It's up on the Euro. And I try to color code between the pink boxes and the green boxes. Those are automated, associated with an indicator called the adaptive moving average. Those boxes come up and it'll let you know what the trend direction is. And then we also will let you know with some manual notations on the chart if there's a trend change. Like, for instance, the trend on GDX, gold miners, has been down since June 9. However, it is flirting with a trend change. We've got a large green arrow under today's candle. We have price jumping up above the blue line. That's the ATR volatility stop indicator. And it's now flirting with the adaptive moving average on a daily chart. So this is, you can very quickly see that it is flirting with a trend change on GDX. And see this tan area down here and this brown box? When that's in place, that means that the trend whether it's an uptrend or a downtrend, is overstretched. It's overextended, and you're likely to see a reversal quite soon. And that looks like the setup on GDX. Gold, the trend has been up since July 27th, so on and so forth. So I'm still showing you what is available on my site. And so that was the daily trend reports. But if you're a premium plan member, you get everything. You get the premium plan nightly algo reports, the basic trend reports, the recordings of the webinars, and the Monday and Wednesday screenshots. So let's look at what you get with the premium plan. Here's tonight's edition of the nightly algo report. There's basically two tabs, and one is, and this tab here, which is, it'll show you an actual nightly report, and this is for the evening of August 4, and you can very quickly scan down through. And if you see any, as you can see, there's a new buy signal that came in today on the NASDAQ. Also, there was an exit from a buy signal that came in originally on July 28 on the Russell. The fact that it's yellow is indicating that it's saying go ahead and take profit on that Russell trade. On the XLE, we got a new sell signal today. In the financial sector, it's been on a buy signal, and it's saying exit the trade today in profit. And on gold miners, the last signal that we got was a sell signal a couple of days ago, and it's saying, hey, get out of that trade. It's no good. It's got stopped out. Yes, Dennis, we'll do whatever you want to do when we get, by the time I show you all of this, you can ask for to see my Elliott Wave counts on whatever you're interested in, and I'll show them to you. But the premium plan features automated signals, momentum signals, and sentiment condition screenshots. Well worth sticking around and looking at what these things have to offer. So that's a typical nightly report that shows the signals. And then it also shows you something called the sentiment conditions screenshots. This is a relatively new addition to our premium plan. And what it does is it measures commercials positioning. Now, commercials are typically the producers of a commodity or the producers of the item. Commercials are really easy to understand when it comes to, for instance, crude oil. The producers are the oil companies. And in mining, the producers are the mining companies. These are the companies that are the entities, the commercials that are the very closest to day-to-day 24/7, 365 involvement with that item. Now, sentiment conditions, I should say, commercials. Let me get to a commodity. Okay, here is crude oil, and you have three different measures of the current positioning of commercials, the oil companies. Nobody knows more about this business than they do, and they are long. They're heavily long using three different measures. One is commercials as a percent of open interest. A second one, and that would be the fastest acting commercials indicator available. Then there's a 6-month look back commercials indicator. And that means that wherever they are on this scale represents how they are currently positioned in comparison with their most bullish and least bullish positioning over the last 6 months. And as you can see, they are heavily long. That's why you have a green background. When they're heavily long, you have a green background. When they're heavily short, you get a pink or red background. A lot of this new sentiment conditions screenshot that we produce for premium plan subscribers every night, updated on well over 24 different items. They could be stock markets, commodities, typically one of those items, and also currencies and bonds. They're all included. But the most effective, I think, are the ones where you know exactly who the commercials really are. And when it comes to commodities, it's obvious who they are. So this is a fast acting indicator. This is a medium speed, and this is a slower speed indicator. This is commercials present positioning and how it relates to their most bullish and least bullish positioning over the last 6 months. So the commercials are headlong, heavy, long to the long side right now on crude oil. Then the other indicator down here is the daily sentiment index. And if the daily sentiment index isn't available on an item, I replace it with a replacement indicator that I came up with called synthetics retail sentiment. But the daily sentiment index, DSI, is the current percentage of retail traders who are bullish. And I've been kind of putting some of the extreme numbers on here manually, but right now 51% of retail traders are bullish. Usually at a major low, you'll have the commercials all heavily long, and you will have the retail traders heavily short. What indicate you'll know they're heavily short if they're down below, I'm going to say 20 on the daily sentiment index, and they're at extreme level of heavily short if they're into single digits, like below 10. So yes, this is a contrarian indicator of the DSI is, because at major turns, retail traders are notoriously heavy, very heavily positioned to the wrong side of the trade. In other words, they're trend followers. And the further down it goes, the more bearish they get. And inevitably, when it bottoms, maybe capitulates an item, they'll be down around a 10 or so on the DSI. And if that occurs at the same time as all three majors of commercials are heavily long, I call that a perfect storm. So I've got a quick question for you. Is crude oil in a perfect storm of bullishness right now? Anybody? Anybody? I want to offer up an opinion after that. I quickly taught how to read these indicators. The answer is no. It is not yet. Yeah, exactly. Not yet. These are good answers. And because we don't have the retail throwing in the towel quite yet. Now, I am always on the look for a perfect storm of bullishness or bearishness. Let's look through some of these commodities. These are all screenshots of tonight's edition of the Premium Plan Nightly Algo Report. Now, in the Dow Jones Industrial Average, you have the commercials for the most part on the long side, but you also have retail pretty heavily long. So it's really not right now in a strong position indicating much of anything. But when was it? Can you tell on this chart when it was last in a perfect storm position? Anybody? Can you tell on this chart? And I'll go back and we'll look at these charts full screen pretty soon. The answer, Dennis got it right. The answer is mid-June. Mid-June. June 21 is actually what that says. And on that date, you had the commercials all heavily long, and you had the retail just barely coming off of a very deep reading in the synthetic retail sentiment. So they're at that mid-June low. This indicator, the sentiment conditions screenshot, was on the money. Let's look for other possibles. It was on the money with a signal that everything was correct for a turn. How about the euro? Does anybody see a perfect storm on the euro? Either bullish or bearish. Yeah, July 15. July 15. So it capitulated down into this low. And there's a couple of other things I want to explain to you about this screenshot. It's that brown stripe. That means the ADX indicator is over 60. And that means that the trend, in whatever direction it's going, is way overdone. So that was a warning. You had the commercials all heavily long, and you had the DSI in a single digit and an 8 down here. And there's a little stripe. Only 8% of retail traders were bullish on that day. And so there's a large green triangle that there's a large green triangle right there that was associated with that 8 DSI or 9, whatever it was. And notice that down here on the DSI indicator, whoops, hold on. That was the euro sentiment. Okay. On the DSI, the daily sentiment indicator, that's the current percentage of retail traders that are bullish. There were only 8%. And while you had our commercials, the fast, the medium, and the slow acting commercials indicators, all showing the commercials heavily long. You had the ADX brown line saying that this downtrend is way overdone. And then you also had that notice there's two lines down here on the DSI. One, that little black line going back behind is the actual DSI reading. And then that color line that changes from green to red is a 3-period simple moving average of the DSI. And when that is sloping down, the candles up here are red. And when that starts sloping up, the candles up here turn green. And notice on July 15, after we saw extreme retail readings, extremely bearish retail readings, we saw the ADX above 60. We got our first green candle after the brown zone, the ADX above 60, and that was on July 15th. That was a perfect storm. And you can see that it's acting very bullishly after that. So in the case of the euro, in mid-July had a perfect storm of bullishness. And we already learned that in the stock market, in mid-June, we got a perfect storm of bullishness. And these aren't based on anyone's opinion on the Elliott Wave count or anyone's opinion about what the Fed is going to do or not going to do. This is strictly based on commercials positioning versus retail positioning. And okay, gold is a perfect example of how excellent this sentiment conditions screenshot that we've been sending out, and template and screenshot we've been sending out to premium plan members for several weeks, how excellent it has shown trades to anyone trading gold or gold related items like gold miners. Notice right here, the commercials were pretty much heavily short, and we had the retails at a 67. That was a bearish condition. And then right here, we had the green zones. That means commercials are all heavily long, and we had the retail down at a 22. Then we got the first green candle inside of a large green box, and that was bullish, and it was a huge move. Then up here, we had the brown stripe saying that the trend is overdone. We had commercials heavily short, and we had the retail at 95. That was a perfect storm of bearishness. And one candle after the top tick, this thing was saying, hey, we probably topped here and we're going to be going down for a while because this has been a very extreme move. And so that was correct. Then we got another one of those signals right here. Commercials heavily short, retail at an 87, and then the first red candle inside of that box after that 87, that means that this smooth DSI started sloping to the downside. It started turning red, and it gave the signal right there, and look what an awesome signal that was. And then right here, it was bullish. It was bullish, okay, but it didn't go up very far. So I've been teaching you how to read this thing. The commercials are all heavily long there. Why didn't this move much higher right from this position here? Anybody? Anybody? I want to guess why, or tell me why that wasn't a perfect storm of bullishness. I mean, we had the commercials all heavily long. What was wrong with it? DSI was too high. Exactly, William. It was a 51. That was nowhere near the retail traders capitulating. Exactly, Mike. Retail traders were not in an extreme level. It was meaningful, you know, for a little trade for a minute, but it pooped out and it had another leg down. And this time we got the brown stripe, we got the ADX above 60. We had commercials heavily long, all three measures, the fast, medium, and short and longer term. And this time we got all the way down to a 21 on gold on the DSI. And we got our first green candle after a capitulation, what looked like a capitulation low. And I'll show you one other thing about this. It looks like a really nice 1, 2, 3, 4, 5 wave down structure. Pretty obvious. And so that, I believe, was a perfect storm of bullishness. It would have been nice to see a little lower DSI, but as my paying subscribers will tell you, I felt like that was low enough because silver, which we also look at every week, was at a 10 right here. And it was all green up here like this, and it was at a 10. I'll show you in a second. And so I felt like there was a perfect storm of bullishness brewing, and the timing was exquisite. This, by the way, all of these concepts, these different ways to measure commercials positioning, especially are Larry Williams concepts. So they were inspired very much by what Larry Williams has written about many times in many of his books. I just added the DSI or my replacement indicator for DSI called synthetic retail sentiment. And then I smoothed it out and I had it changing the colors of the candles, so on and so forth. Let's look for another perfect storm. And this is something you can do as a premium plan member every night. You can just bring, I'm just looking at the live website right now. I'm just scanning through to see what looks like it is at or very near a perfect storm. Okay, here's one, the Russell. As you can see, the commercials heavily long the Russell, and the Russell, my synthetic retail sentiment was laying right on that oversold line down there. And then it got after a capitulation move, it got its first green candle. That was on June 17, and that was a perfect storm of bullishness. Notice I'm not sitting here going, well, the next thing I need after this June 17 is I need a clear five wave up structure. And then I need a clear 3-wave pullback. And then I'm going to be interested in getting on. That's Elliott Wave talk. And this is able to time these things in at without without the need of needing a 5-wave move to establish the new trend direction and a 3-wave move back. It's absolutely, this is, I have been trading and looking at different ways to look at the markets for a very, very long time, and this is absolutely the sentiment conditions is something that has given me more confidence to jump on a trend change quickly and early than I've ever seen. I've never seen anything that was as easy to read as this. Okay. Silver. I told you that I thought gold had probably capitulated and was going to start moving up, and very much because I saw something happening on silver that was an even more perfect storm. We had the 3 measures of commercials heavily long, and we're just, I mean, people had given up on silver. It was a 10. It was at a 10, near this capitulation low, and we had the ADX, those brown stripes above 60, and the first green candle after that capitulation low was where the slope of the 3-period moving average of the DSI starts sloping up, and that was July 15. And look what's happened. It looks like a really clear 1, 2, 3, probably in a way 4 here, and get a 5-wave up. Absolutely. Look, look at the perfect storm that occurred right back here. It's on the very same screenshot. The pink here was a means the commercials were heavily short. All 3 measures, the fast, the medium, and the slow acting commercials. And look at the DSI here, 93. That was that red triangle right there. Anytime you get into above 90 or below 10, you start getting large triangles. And then the very next day after the top tick, you had a color change on the candle, and that was a perfect storm of bearishness. I'll get to it, brothers. I know a lot of people, lots of people interested in the S&P, and I think we're almost there. Okay, here we go. This is the Algo on S&P, and I'll talk to you about the Algo as well. But okay, can anybody tell me, by looking at this chart, if there has very recently been a perfect storm on the S&P? Anybody? It's on the chart. We know, we show it for people. It was June 15. June 15. That is when the commercials were heavily long, and you had a 7 DSI followed by a 9. Let's get into really zoom in here. So on that day right there, the bottom tick on June 16th, the DSI was a 9. The very day, the prior day in this case, we had a color change on the slope of the 3-period moving average of the DSI. So from July 15th, and we had the bottom tick on July 16th. And then we've seen several other signals ever since then. Here's all of a sudden the commercials all together decided, hey, whoa, we got a new deal. They were kind of acting a little iffy for a second here, and then they jumped heavily long again. That created the new heavy box and a green candle. So there's a green candle in the heavy box. There's another green one. There's another one. We had dips on the DSI down to 14 and 17. And so we have the DSI getting better. So all I'm saying is, if this doesn't give you perfect timing, it's as close as I've ever seen of something that isn't relying on Elliott Wave, Fibonacci, and Hurst cycles. Notice where the commercials are positioned. They're all still heavily long. I'll show you. Let me show you another thing. I don't have to go anywhere. So here I am at my site. So the bottom tick on the stock market occurred on what day? I believe it was June 16. June 16. So we're going to, and so right now I'm looking at, I've gone to our screenshots that we show our subscribers. This is based, and the screenshots are based on Elliott Wave, my Elliott Wave count and main and alternate, as well as, and it incorporates Hurst cycle analysis. And we're going to go back in time to that mid-June time frame. Okay. So here's June 15. This was one day before the low. One day before the low. And we're going to go to US stock indices. So I sent these screenshots out to subscribers on June 15. And here's my daily chart on it. And you'll see that I was expecting one more slight new low to complete a 5-wave down structure right here. And I had several important dates noted. The June 15th Fed day. June 12 was the bottoming day suggested by Hurst. And we were also in the neighborhood right in the nest of an 18-month cycle trough in Hurst. And so that means that all things being equal, we would be looking for a move to the upside out of this low that would last at least approximately 9 months. It's very rough. And then the composite line that was being shown at the time was showing that Hurst was suggesting we're going to get upward movement until January of 2023. Here by the way is the current Hurst cycle analysis on the S&P, and you can see that it didn't mark that June 16 low as the 18-month cycle trough until it moved up for a little while and gave it confirmation. That's what Hurst looks like. But I can tell you, before it decided that was an 18-month cycle trough, and that's what there's this stack of diamonds is. It was projecting that it was due right there, and the composite line looked very similar, which the composite line is predicting where price is going to go. It looks very similar to what it looks like now, and that is that we were likely to get a 5-wave up structure into, and that instead of instead of about mid-January, now that has turned into maybe early February. So it has changed very little. And it basically looking at a 5-wave up structure. Here's a closer look. So this is the current composite line as suggested by Sentient Trader Software, Sentient Trader. This is Hurst analysis. And I could tell you that I knew this hasn't changed. It was expecting a large cycle trough in that neighborhood, and that's basically what we got. So this is the daily chart, and you'll notice that on this day, on June 15, I was expecting one more low and then a move up into mid-January. So let's go and look at the very next edition of screenshots that I showed to subscribers. We'll go to US stocks. So we just looked at, wait a minute, I got to get back a little bit further. Oh, I know what I'm doing here. Screenshots. Now we're going to go to, instead of June 15, we're going to go to the very next one, June 19. And we'll look at U.S. stock indices, and we'll look at my so it's on just 4 days later, I was saying the bottom was in. We did get that fifth wave down. And then I was showing that we were going to move up through about mid-January. Now that gradually over time has morphed into what we basically have right now. So I'm going to move this. Before I move this aside, I just want to make sure that you understood everything I just showed you and how awesome it is, especially with this new sentiment conditions thing. I'd say it's new. We've had it up for maybe a couple months and running, and it basically functions not necessarily as a signaling, it's pretty darn close to a signal, but it's functions as something to help give traders confidence in having in placing the trade. I mean, if all you did is watch CNBC all day, you wouldn't know what the hell to do. Most of those guys on there are still bearish. And the reason is because their main perspective in life is to attach themselves to the Fed's rear end and just sniff away. And they've been trained to do that. And if they aren't going to get back thinking about going long unless the Fed gives them essentially permission to do it. And I've never liked that style of investing or trading. I thought it basically is this tantamount to cheating. It's like, hey, we've got a cheat code, and it's working because they are constantly, when they come in with stimulus, you better get long right there with both fists. But this time I think is different. Because they're kind of handcuffed from doing stimulus because of the inflation. So printing money in the face of heavy inflation is something maybe the Fed can't do or they won't do. And so it's caused a lot of, I would say, money managers especially to be extremely cautious at this time, thinking that this time we don't have the Fed backstopping us. And it's and I think this rally that we've started seeing is purely technical. But anyway, I'm going to go back to the live chart. And I haven't talked much about our algo signals, which are also part of our premium plan. And believe me, I'm gonna show you the algos and how that works real quick. I already showed you the new sentiment condition screenshot. And I already showed you how you can flip through and find the which items are in a perfect storm condition on sentiment. I already showed you my mid-June calls for the market to turn back to the upside, but I want to show you some longer-term analysis on stock market as well on Elliott Wave in a minute in Hearst. So there's several more things I wanted to show you, and then we'll start getting into your specific questions. Very quickly, every night there are trade signals that go out. They have nothing to do with Elliott Wave, nothing to do with Hearst, very little to do with sentiment. Now, on items that we have the DSI, the daily sentiment index available, I can filter out trades if the daily sentiment is beyond, above or below certain thresholds, and I can back test for those thresholds. Like on the S&P, if the DSI is above 90, but based on back testing, it will not take any new long trades. And then if the DSI is below 8, it will not take any new short trades. So it does use extreme sentiment conditions as a filter. But this is all back tested, and there's a number of parameters. It looks for agreement of the adaptive moving average system as well as the Walter Bressert system. I've talked about this many times. In prior webinars. If you're super interested in how these algos work, I've made webinar after webinar that talked about all the nitty-gritty on this, but this is based on back testing from July 1 of 2019 through June 30 of 2022. And here's all the parameters of the different indicators that I back test for. And very quickly, based on current settings, I'm going to have it run a back test. And what it comes up with is, where'd it go? If you start with an account size of about $20,000, and had these settings been in place for the last 3 years, it would have taken a account size of $20,000, and it would have added over a 3-year period $125,000 worth of profit to that. Had every signal been taken to the T. It would have done 86 trades in that period of time. 55 would have been winners, 31 would have been losers. And you might be going, well, that is a terrible win percentage. I want to win like 90% of the time on my algo. Well, here's the problem with that. If the only way to set up an algo that wins 90+% of the time is it has to take profit very quickly. If it sees any profit, it has to just quickly take it. And what you end up doing is if you start with an account size of $20,000 and you're making $10 at a time every time it trades, I mean, in 3 years' time, you might only have made $5,000. So going for a high winning percentage is not going to work in automated trading. And this is after years and years of experimentation and backtesting, this is what I found. What really happens in the markets is the markets will move from trending to consolidation to trending. And the markets really are only strongly trending about 1/3 of the time, maybe up to half of the time. The rest of the time, they're chopping sideways, and it's a very difficult. A sideways choppy market is a very difficult market for an automated trading system based on momentum. You take this rise on the S&P, it's been pretty choppy. And so an automated trading system based on momentum will get in late, and then it has to exit because it runs out of momentum pretty quick. Now, this algo has been able to produce a winner here. That's the green box is a winner, and a very small loser here recently. But what it really needs in order to make money and make money fast is it needs a strong move, like it had right here. And so what my algo is designed to do is to assume that every time there is a momentum, a momentum gain, that it will try to ride it under the understanding that about half the time it won't trend. It'll get stopped out, or it'll get choppy, and this is why using a stop loss is critical in automated trading. But once in a while, you get a massive, quick trending move like we got right here. So this algo made $18,000 in about 10 trading days. And that was back from early June down through mid-June. And notice that was the bottom. That was probably the 18-month cycle trough. But it's winners like that. See, every one of these big green boxes, like here, here, and here, those are winning trades. Any of the red boxes, there's one, and they are always going to be relatively small because of the use of the stop loss. But the difference in this particular algo, the main difference is it has an open price objective. It doesn't take profit based on X number of set pips or ticks. It waits until there is a Walter Bressert. And so this is a double smooth RSI. I call it the Walter Bressert. It's the RSI 3M3. This Walter Bressert was a pioneer of technical analysis, and he would use this and a moving average of it. And I back test for the best setting for the moving average. And when you get a Walter Bressert like that, a green one, that means if you're in a short position, get out. That's your take profit. And notice that it stayed short on that trade and never got a green block until down here. So the price objective is open. And so when you get a strong trend, you get these huge winners. And that is why on our automated algo system, which is really easy to participate in, you can check your email and look at it for 10, 15 minutes every night, see if there's anything new you need to do. But very quickly, I'm going to find there. Okay, here's the secret of the system. The average win, $3,163. The average loss, $1,562. This is trading one contract at a time. One contract at a time. And therefore the average size of the average winner is over twice as big as the average size of the average loser. That is ultimately what real experts about investing and trading will like to see. If there's a 2-to-1 risk reward to risk ratio, they're interested in the trade. If it's less than that, they're not as interested. So here's the equity curve. Had these settings been in place for the last 3 years, these exact settings, you would have started with 0 profit, and then this represents the profit that would have added on. And this is like the holy grail of equity curves. You want a smooth, trending equity curve, and that is about as close as you'll ever see. And this last huge move to the upside right here was, in fact, that trade that made that. And you go back in time, you can look and see that the large green boxes are the winners, the red boxes, which you are in there, but you can't hardly see them most of the time. There's one. Many times it gets stopped out just one day later, so you don't really get a very big box at all. But the winners are typically, on average, twice as big as the losers. So that algo continues to work. It's never stopped working. It's continued to be excellent. And because I designed it after reading quite a bit about how to make a robust algo, I think that's the reason it works. It's strictly based on indicators. It isn't looking to scalp little things. It's looking for genuine momentum, and it knows that about half the time the momentum isn't going to continue very strongly. But maybe about half the time it does, and that's why it works. So there's the algo. A lot of people think my premium plan is just about my algo, but it's not. I already showed you the second aspect to it, which is the sentiment screenshots, which I believe that every trader out there would be well serviced to have over 2 dozen sentiment condition screenshots on over 2 dozen tradable items. I think the number is like 27 every night, so they can pick and choose which items are in that perfect storm status. Why do I say this? Because for many years as a trader, how many people in here have experienced this? You've got 3 different trading ideas that you're looking at, and you decide, okay, I'm going to go with this one, and it loses, and the other 2 ideas that you had in mind were winners, but you weren't in that trade, so you picked the wrong thing. Anyone who has traded for any length of time has had that happen to them over and over and over again. And this is one thing my service does that I don't know if anybody else does as well. It helps you choose which items are in the best position. In other words, which items give you the best odds of winning. This is very much a Larry Williams style trading idea. And that's the way he would do it. And William is a long time on the chat student of Larry Williams' teachings going back decades, and Larry calls them setup markets. So that helps you choose which item to be trading right now. Okay, so I've shown you the algo. Oh, and we're going to do a blog post about this, and we're going to make the following spreadsheet available to you. Here's another thing that we do. If you're going to trade the algos signals, and that's your intention as a premium plan member, then you want to be able to sort the results over the last 3 months by any number of categories. I've got this currently sorted by a 3-year percentage gain. So this takes into consideration what your starting account, the required starting account size, in order to utilize the signals all along the way, including during the drawdowns. I mean, and the total percentage you gain, you would end up with after 3 years based on our back testing. So on the S&P, the ES contract, trading 1 contract at a time, 64% winning percentage, total net profit in 3 years, $125,000, and it needed $19,774 to start. Now that particular algo, you have to use a $2,000 stop. And I know there's a lot of traders out there that there is no way in hell they would ever put on a trade and have that huge of a stop in the futures market. And so the futures exchanges did us a huge favor, and they created the micro minis. So you could trade the exact same signals that we show in the ES with the MES contract, and everything is 1/10 the size. So that your account size required is only $2,000, and your stop size is $205. Yet Dennis makes an excellent point. Or you can use options. And control your risk that way. You get plenty of leverage. And I don't teach how to do that. There are other really good books and things about that sort of thing, using options to it. And I have some of my most successful traders that are subscribers to my work are options people. So anyway, we're going to make this available to everyone, so you can go through and sort. Like, for instance, let's say you wanted to only trade something with the smallest or number of consecutive losses. You don't want to, maybe you would not trade the NASDAQ because it experienced 10 consecutive losses at one point. You'd want to look at ones that only had 3 consecutive losses. Well, that would be the S&P Algo. That's why I keep pointing out the S&P Algo. It really is the best across the board. A lot of traders, they can stomach 3 consecutive losses, but they probably would give up if they saw 5 or 6, much less 10. And yet, the NASDAQ, if you look back, even with those consecutive losses, the NASDAQ still was a pretty good trading one NQ contract at the time. It brought in 145,000 over. It had slightly less than a 50% winning percentage. It's just that there was a point in there somewhere where it lost 10 trades in a row. It was probably during a very long sideways choppy market. Anyway, we'll make this sortable actual Excel spreadsheet available to you. You'll be able to download it and you can sort through them and just kind of see which one might make the most sense. So premium plan members, they get the Algo report every night that shows signals. It looks like it's working on a buy signal here, but it won't officially call this a buy signal until the end of that candle. If I take the streaming off, notice there's no buy signal there. We always take the streaming off and show you the last closed candle when we send it. And yes, it exited this long position in a small loss here recently because there was a loss of momentum. This is one of a really good example, and I saw that someone asking about that earlier in the chat. Why did it take profit here? Well, it saw some loss of momentum. It got a Walter Bressett crossover, and the Walter Bressett is kind of highish up here. So what does a person do if they're trying to use the automated signals kind of as inspiration in their Elliott Wave?